The influence of beliefs. Mark Douglas emphasizes that a trader's beliefs and perceptions play a significant role in shaping their mindset and, consequently, their trading decisions. Here's a more detailed explanation of this concept. Beliefs and perceptions. Beliefs are the deeply ingrained convictions and attitudes that traders hold about the market, themselves, and their trading strategies. These beliefs are often shaped by past experiences and observations of the market. Impact on decision-making. Beliefs can have a profound impact on a trader's decision-making process. For example, if a trader believes that they are destined to fail in trading, this negative belief can become a self-fulfilling prophecy, leading to poor decisions and a lack of confidence. Self-fulfilling prophecies. Traders need to be aware of the self-fulfilling nature of beliefs. If a trader firmly believes that a particular technical indicator always works, they may act on that belief, potentially influencing their own actions and the actions of other market participants. Adaptive beliefs. Successful traders cultivate adaptive beliefs that are aligned with their trading strategies and objectives. These beliefs are rooted in rationality, objectivity, and a probabilistic mindset. They help traders stay disciplined and focused on their trading plans. Challenging. Negative beliefs. Recognizing and challenging negative or irrational beliefs is essential for personal growth as a trader. Traders should strive to replace detrimental beliefs with empowering ones that support their trading goals. Continuous learning. Traders who understand the influence of beliefs recognize that beliefs can evolve over time. They are open to learning and adjusting their beliefs as they gain experience and knowledge. In essence, the fourth point in Chapter 1 underscores the importance of self-awareness and the influence of beliefs on a trader's mindset and decision-making. Successful traders actively manage their beliefs and work to cultivate adaptive ones that align with their trading strategies and objectives. By doing so, they create a more constructive and resilient trading mindset that can contribute to better trading outcomes.